This is your daily market recap. I don't know why that was so awkward for me to say. This is your market recap for June 11th, 2025. Today we can see we reacted nicely off of this daily fair value gap, which I predicted us to. Honestly, gave me more of a reaction than I thought, but at least going into the day, once we made it through the day, I saw things as they played out. We can see, so today was CPI, so AM session was always a little uncertain in my mind. Whether or not I wanted to take it depended on where we were in the market and how market acted once we did open up. So CPI did take us right into this daily fair value gap. But once we were there, as you can see, AM session didn't really do much. There was a possible buy that could have been taken, but given CPI, I was a little hesitant, and rightly so, because it wasn't the best trade. It was one where it kind of just slowly chopped in the right direction, but definitely not one that would be, I'll say, emotionally rewarding to be in. But once we hit lunch, we came all the way down, took out AM session's low, which in my mind is always, well, maybe not always, 90% of the time, a sign that PM session is going to play the opposite of what AM session did. In this case, bearish. So we did end up doing that. Came to take out this 1 o'clock low on Wednesday and then Tuesday's low as well. Well, I guess this is Tuesday's low, but this 2 o'clock Tuesday low. And then from there, we retraced up off of it. So if we go down to the 15-minute, you can kind of see just more of that. This is the run that I'm talking about for AM session. It's a little slow if you just compare this. I mean, that's an hour. Well, if we go there, yeah, it's an hour worth of price action to give you. Geez, I'm going to have to measure this again, aren't I? To give you 140 handles, whereas here you have 45 to give you 180. And you can just see the amount of wicks here and the lack of wicks here kind of just went straight to its target, which is nice. Yeah, nice reaction off this fair value gap low, and then price rallied one more time, failing to take this high. So that was number one reason why I thought we would play bearish this afternoon. And then, of course, we took out AM session's low, which is number two reason why I thought we would play bearish PM session. We then, from there, rallied up. Looking at this 15-minute inverse fair value gap, we have this 15-minute buy-side imbalance, sell-side inefficiency, validated by this wick here, closing in here, and then this expansion upwards. And then when we close below it, we react off this, we come back up to it, tap into it, nice reaction off of that during the macro, starts the bearish move. Like that, was a little late to catch this one. Usually I hop on the charts to catch the, what would it be, 150 to 210 macro, and I did, but as you can see, that macro is all the way down here, so I was a little too late to catch that one. But I did end up catching this little move right there. Now if we go down to the 5-minute, 5-minute doesn't really show much more. You can see the wicks here, a lot of wicks, and they're pretty big. Kind of shows you the lack of, let's say lack of enthusiasm in playing bullish. And then from there, broke down, started to retrace at 11. Once London session closed, we then came all the way back up into this 5-minute to start not PM session, lunch, where we took out this low, retraced to this 5-minute or 15-minute inverse using this 5-minute. Nice reactions off constant encroachment there and there. And then, as you can see, during the macro, the move starts, algorithm kicks back in, and we just take off from there, taking out this low and this low here. We then retrace up to equilibrium of this bearish move. If we grade this whole thing, well, equilibrium's technically there, but if we go from this high, equilibrium's there. Either way, the array that is within that is this 5-minute fair value gap there, which price nicely comes up here to touch perfectly before the macro for us to take off. I was expecting us to come down here, but it makes sense why we didn't. It's a very, very energetic beginning to PM session, and to take out this low, we would have to be very quick for us to fall back into the daily range before closing, and that just didn't happen. If we go down to the 1 minute time frame, not really much more other than what I said. SMT up here, which caused this little drag down. We have an SMT of these lows, which I was looking at to play bullish. ES did not take out that low there. Obviously, NQ did. I would have been looking to take this because, well, maybe if price had not just dipped so down so quickly and then up so quickly, I would have been more of a fan. But since it just went so fast, there was no real short-term change in the stated delivery that I could use on the 15-minute. Also wasn't a big fan of this price action between 9:30 and 9:45. We then also had an SMT of these highs, which I didn't like. A bunch of things that kind of scared me off this morning. We then rally, as you can see, slowly. I mean, the amount of red candles and just the size of the green candles here is very, very small. And we take out these highs here and fail to take out these highs. Nice SMT up here is what starts the move for the lunch retrace. We then expand downwards, 5 minute, expand again, take out this low, back up to this 15-minute. The 1250 to 110 macro starts this bearish move. You can see the high of that happening right at 110. We then displace downwards, get a nice little SMT here right as the algorithm resumes its work. Which actually, if you think about it, makes sense, because what do we look for usually at the start of PM session, before the PM session move, is a sweep of opposing liquidity. Now, we don't have that here, but we have that on ES. That's how we get this SMT. So move started during the macro, check, SMT, check, sweep of opposing liquidity before starting PM session move, check. And then if we look for a change in the stated delivery and a 15-second fair value gap, change in the stated delivery on the 15-second and a 15-second fair value gap, we get this right here, which if you're cautious, stop would have been up here. All right, constant encroach onto that wick, and you would have been targeting. Personally, I don't think I'd target any lower than this, but if you were ballsy, you could target all the way down here, or not ballsy. If you knew where it would go, had a little more experience in that case, that would have been a 1 to 22. So that would have been a pretty good trade, but if you were a little more certain that price would not come up above this 15-second fair value gap, I believe you could have slapped it around, I think it was 750, which would have gotten you a 1 to 36. So that would have been a really big trade. And for if anyone's wondering, it may not look like it taps into it because it looks like this is just a 1 minute fair value gap. But on the 15-second, this little nub that goes into the box, that would take us in, which is why I have it there. Yeah, so if you're targeting the right lows, that would have been a very good trade. I saw how we reacted off of taking out this low. Actually, since we took out this low, I was looking for us to retrace, but we did it after taking this one, and then the time just happened to fall. So SMT of highs, macro starting, displacement, nice inverse that got left open, which I like to see. Entered on a 15-second, actually a little before it got filled, just because I had a feeling we'd play bearish and I didn't want to miss out. So I entered here. That was my entry. I could have entered up a little higher. Stop was up here just to be safe. And then I went break even here, took profit ones here, and then as soon as this candle here closed outside of this inverse fair value gap, if you look here, volume imbalance, gap, that's a sell side imbalance, buy side inefficiency. It is respected, in my opinion, with this closure here and this bearish move there. So, actually, no, sorry. I was looking for this to be a reclaimed. That's not an inverse. I was looking for this to be a reclaimed bearish fair value gap. It's used as an inverse here, which tells me that it's valid. And then once we close down here, I didn't want to see price close above it, and that's why I closed out my position here, which would have saved me maybe a couple $100. But yeah, from there we kind of just went horizontal and stayed within the daily range. So honestly, not very pretty day. AM session was tradable, but nothing spectacular. Now this PM session move that you're seeing here is obviously trade of the day. Huge, fast, all the things you'd want out of a trade. But looking into the future, we did react off of this. Do I think it's long-term? Absolutely not. I think we're seeking these highs. It is taking us a long time to get up there, though. But I think we'll get there eventually. With that reaction and how we took out these lows, we may come down to take out these lows. That might be a little extreme. Sorry, I'm trying to just see this on the daily time frame. That low is there. It's possible we're going to dip down there, but I wouldn't be surprised if we don't. We could stop a constant encroachment of this wick there. We could also just take this low and go from there. That's what I'm seeing. I'd like to see us play bullish tomorrow, but again, we have PPI tomorrow, so a little weary of AM session once again. And as always, we'll have to see what overnight gives us. So this has been your market recap for June 11th, 2025.